What is Bitcoin? Bitcoin is a digital currency which is global and decentralized. Bitcoin is one example of a convertible virtual currency. Virtual currency that has an equivalent value in real currency, or that acts as a substitute for real currency. How Bitcoins are generated? Bitcoins are generated by a process called mining. Bitcoin mining is a peer-to-peer computer process, which is used to secure and verify Bitcoin transactions payments from one user to another on a decentralized network. How Bitcoins work? Bitcoins are the digital coins which can be digitally traded between users and can be purchased for, or exchanged into, US dollars, euros, and other real or virtual currencies. Bitcoins are stored in the digital wallet. What are the advantages of Bitcoin? Bitcoins are transferred via internet without going through the bank. This means there are low fees of transaction, and you can use them in several countries. Your account cannot be hacked or freezed. Is income from Bitcoin taxable? According to the IRS, virtual currency, such as Bitcoin and other cryptocurrency, will be taxed by the IRS as property, and not currency. So virtual currency will be taxed as capital assets. How to report income from Bitcoin? Bitcoin holders should report the receipt of Bitcoin Cash on their 2017 income tax returns. The sale or exchange of a convertible virtual currency, including its use to pay for goods or services, has tax implications according to IRS. Who need to pay taxes? All U.S. citizens and residents are subjected to a worldwide income tax. This means that, wherever money is earned, whatever currency, it is taxable. What type of gains from Bitcoin are taxable? Any gains made from selling cryptocurrency within any exchange are taxable. Any gains made from selling cryptocurrency to any individual are taxable. Any incomes of products or services purchased with cryptocurrency are taxable. Let's see an example. Let's say Bitcoins were bought for $200 each, and one Bitcoin was given up in exchange of $300 or equivalent value in goods. The investor has gained $100 on one Bitcoin over the holding period and will attract capital gains tax on $100. How much is the tax rate? Bitcoin tax rate is determined by two factors. 1. How long you held the coins. 2. Your ordinary tax rate. Gains made from cryptocurrency bought and sold within a year or less are considered short-term capital gains and is taxed between 10% to 39.6%. Gains made from cryptocurrency bought and sold after a year are considered long-term capital gains and taxed up to 0 to 20%. Forms to calculate capital gains and losses are Schedule D and Form 8949. How IRS is treating Bitcoins. The reason the IRS is cracking down on digital currencies appears to be because only 802 people declared Bitcoin profits or losses in 2015. The IRS can now track Bitcoin and other cryptocurrency addresses. IRS has purchased a software from Group Chain Analysis Group, which can audit someone's cryptocurrency transactions. The name of the software is Chainalysis, through which IRS has decided to audit someone's tax going up to 3 years back. Penalties for not reporting virtual currency on your tax return. Failure to report virtual currency may subject to penalties and interest. In more extreme situations, taxpayers could be subject to criminal prosecution for failing to properly report the income tax consequences of virtual currency transactions. Criminal charges includes tax evasion and filing a false tax return. Penalties for tax evasion. Anyone convicted of tax evasion is subject to a prison term of up to 5 years and a fine of up to $250,000. Penalties for filing a false tax return. And anyone convicted of filing a false return is subject to a prison term of up to 3 years and a fine of up to $250,000. So don't forget to report your income from Bitcoins or any other virtual currency. We hope this video has been helpful. If you have any questions, please contact 1-888-AOTAX or you can log on to www.aotax.com.